Topic 1. U.S. gas prices are expected to rise due to increasing oil prices following a strike in Iran, affecting the economy and consumers. Details: oil prices surged over 3% on Tuesday due to missile attacks from Iran. Experts predict that U.S. gasoline prices could rise by 10 to 15 cents per gallon. Iran stated that the attack was a retaliation for recent assassinations of Hezbollah leaders by Israel. An Israeli official told ABC News that Israel would respond significantly to Iran's attack. If tensions escalate in the Middle East, oil and gas prices could spike, impacting the global market. However, the U.S. set a record in 2023 with an average daily crude oil production of 12.9 million barrels, which may help mitigate supply disruptions. If both sides de-escalate, oil prices could quickly return to pre-attack levels, but a war in the region could shake the market and drive prices up. President Joe Biden and Vice President Kamala Harris are monitoring the situation from the White House and have directed U.S. military support for Israel's defense and missile interception. Topic 2. Dockworkers' strikes across various ports are causing widespread concern for supply chain disruptions and economic impact. Details: 45,000 dockworkers along the East Coast and Gulf of Mexico have gone on strike over wage increases and automation concerns. Major ports, including Newark, have largely halted operations, significantly impacting the U.S. economy. The strike affects various industries, including agriculture, footwear, auto parts, and electronics, with daily economic losses estimated at around $5 billion. The union is demanding a $5 hourly wage increase over 6 years, but negotiations remain stalled. Experts note that businesses could have better prepared for the strike, but concerns about the supply chain persist. Topic 3. Iran launches ballistic missiles at Israel, escalating geopolitical tensions and affecting global markets and oil prices. Details: as tensions rise in the Middle East, European stock markets have seen gains due to increases in energy and defense sector stocks. Following Iran's largest military attack on Israel, concerns over oil supply disruptions have led to a more than 3% rise in oil prices. Israel and the U.S. have vowed retaliation against Tehran, heightening fears of a broader conflict. OPEC Plus is expected to increase production without changing policies. Meanwhile, the Bank of England has warned that global asset prices remain high and are vulnerable to significant declines amid growing geopolitical risks. Topic 4. Hurricane Helene causes significant damage, leading to power outages and prompting discussions on disaster recovery and funding. Details: Hurricane Helene has struck the eastern and southern U.S., coinciding with a strike by about 50,000 dock workers, demanding a 77% wage increase and a ban on automation. The strike is expected to impact food supply and the economy, particularly affecting the delivery of essential goods needed for recovery in hurricane-affected areas. President Biden has stated he will not intervene in the strike. Meanwhile, Congress is discussing additional funding for disaster recovery due to Hurricane Helene, but the likelihood of an early reconvening appears low. The hurricane has caused significant damage across Georgia, South Carolina, and North Carolina, leaving over 1.4 million households without power. Many are living without water and electricity as recovery efforts continue, and power companies are working to restore the grid, though it will take time for work to be completed on the ground. Topic 5. Financial markets are experiencing volatility, with the S&P 500's performance, China's property stocks rally, and global market cautions from experts. Details: on Jim Cramer's Mad Money, the performance of the top 10 companies in the S&P 500 index for the last quarter was reviewed. These companies, including Erie Indemnity, GE Vernova, and Palantir, are excelling across various industries beyond technology. Hong Kong-listed Chinese property stocks,